The federal budget is out, and no, it does not address the heated real estate market. Hello, welcome back to the Vancouver Life Real Estate Podcast and YouTube channel. Today, we're going to discuss the federal budget that just came out on Monday. Well, obviously, there's a whole bunch of topics and items in there, but we're going to focus on the real estate aspects of it, or maybe the lack thereof, because I think a lot of people were potentially expecting this federal budget to kind of address the heated real estate market and potentially supply or offer up some potential cures to it, if you want to frame it that way. But ultimately, there was nothing really there.
I think that, we heard rumblings of capital gains taxes on principal residence, we heard all kinds of stuff. But I think that what they've done here is it speaks to the whole economy. I think at the end of the day that they still need the housing market to run, and they still need the revenues from it. You can see that. And I think they also want to maintain the increase in price points that we've seen. So I don't think there's a huge push to change real estate prices right now, especially not down. Plateau, maybe. Yeah. But even then, some of the things we're seeing, they don't really speak to doing that either.
That's it, right? So yeah, you touched on that capital gains tax, and no, there was no change to that. That is sort of status quo.
Mm-hmm.
For the wealthy, there was a bit of a luxury tax added to cars, boats, and planes, but really there was no other wealth tax. So the idea of taxing the rich to pay for housing, that was notably not included in this year's federal budget.
Yeah. And I mean, adding taxes to luxury cars and boats and airplanes and stuff, that's not going to move the economy needle, right?
Mm-hmm.
So interesting to see national foreign buyers tax.
That's it, right? That's the one thing that they really included is a national foreign buyers tax. That's the only thing. Well, there's two things, but that's sort of the main one that potentially could generate more income for the government to potentially provide housing. So again, it's not, we're not going to see anything in here about increasing supply. It's just easier to tax the demand. So what does this look like? Let's dissect it a little bit here.
Yeah.
They're looking to implement a 1% national foreign buyers tax, right? So this is taxing the real sort of market value or assessed value rather nationally of a vacant property that is owned by a non-resident.
Mm-hmm.
Unlike the foreign buyer tax in Vancouver, that was originally introduced, I think, in 2018 here. It was given, I think a matter of weeks before they implemented it from the announcement. This national tax, they're looking at going into effect January 1st of next year. So we're still, 7 months out before this will even take effect. And let's not forget, Ontario and British Columbia that have the largest amount of foreign investment and the highest property prices, we already have foreign taxes there.
Yeah,
we have empty home taxes.
15 times to 20 times that amount.
Yeah, for the buyer tax, sure. And then we've already got the empty homes tax here too. So this is going to affect other provinces. And if you want to kind of dig it a little deeper here and discuss what kind of money that may actually bring in, well, at last count, approximately 2.5% of homes in Canada are foreign owned. 2.6%.
Right. It's not a lot.
It's not. And if you look at the vacancy, like which actual homes are empty, at last count, this is in December of 2020, there was about 11,000 vacant homes across Canada.
Right.
That's total. So are 2.6%, 2.5% of those the ones that are going to be taxable? Let's do that math,
because
right?
it's not going to be a whole ton.
That's 200 86 homes.
Right.
If it's, apples to apples here, right? We have to speculate a bit here, but let's just run the numbers. And then you've got your average home price is $716,000 right now, right?
Yep.
That's $204 million.
Mm-hmm.
They're going to tax 1% of that. That's going to put about $2 million into the coffers, if I did that math correctly.
Yeah, that's not going to do anything.
It will not. I mean, you're going to build what, 4 homes with that?
Well, honestly, like none of this is going to change anything.
No,
I
it's
mean,
not.
it's stuff to be in the budget to talk about, and that's kind of what we're doing here. But I mean, the truth of what we've been saying for since we've been doing this show is that these kinds of things they will tinker a little bit with what's going on in the marketplace, but it's not going to substantially change anything. Um, Interest rates are still the dominant um, player here, right? Interest rates I mean, the Bank of Canada has come out now and said, the overnight rate's going to stay the same and will remain there until slack in the economy is absorbed, right? Until we start to see that 2% inflationary target. I just don't think much is going to change until that happens, right? I mean, that's the mandate.
Mm-hmm.
So, and housing, we know is going to run hot. We're starting to see a little bit more supply in our local market, anyways, which is helping to maybe stabilize price points. But over the long run here, prices are going up.
Yeah, unquestionably here. You're absolutely right. I just want to kind of think out loud here and play a hypothetical. Just quickly going back to that 11,000 vacant homes across Canada.
Yeah.
If all of them, if 100% were foreign owned,
Mm-hmm.
just to run a scenario here.
Yeah, let's say it was an actual problem.
Yeah, sure. Yeah, there you go. Again, running numbers. So 11,000 homes vacant, $716,000 average Canadian home price. That's $7.8 billion worth of real estate right there.
That's a lot. Yeah.
That 1%, of course, brings it down to 78 million per year that would come in if all homes were vacant and they all actually paid, which could build approximately 225 homes across Canada per year.
Well, we're bringing in 25,000 permanent residents per month. So
yeah, right. You
great.
you can see what's going to continue to happen there.
The math is so simple. Like, it's not. I mean, when you just look at the different pieces and you actually put them in a formula together, it's pretty easy to see what they're doing.
Mm-hmm. So the one other item in the federal budget, the first one in 2 years that is in regards to housing, is they are offering a GST rebate on new homes. They're offering up to a 36% rebate on the GST paid for homes. You ready for this?
That you can't buy.
Yeah. But of a maximum purchase price of $350,000. It does scale up to $450,000, right? Like it'll go 35%, 34% down. But no, there's no rebates on new home purchases over $450,000.
There's also going to be no 36% rebate to anyone here because they're offering a rebate that they don't have to pay out on property that you can't buy because it doesn't exist.
Yes. So there you go. So that's the federal budget sort of in a nutshell about what they're doing for housing.
Yeah.
So really, if it feels like the government isn't doing anything to help cool this housing market or the prices, you're pretty right.
Well, and that's what I don't think they're trying to. And if the measures are to address, unaffordability and supply issues, they're just not addressing them here. They're putting something else in here. But I think it just speaks to the fact that they want prices to continue to roll. They have to keep, this market rolling in order for them to get taxable revenue, right? And I think that they need to see it run. It needs to go higher, and that's the plan. That's why they've pulled these levers, or not pulled any, I should say,
Yes,
right? And I think that's what we're seeing here. I don't think it's negligent either. I think it's by design. I'm kind of that mindset. you know, I just don't think that there's a whole lot of conversations going on about how to get young people into the market without, you know, going through their parents or something to that effect, right? Because these, new GST housing rebates, for example, is a joke. It's a joke. I don't even know where you can buy a home for $350,000 in BC where GST would be applicable.
Yeah, there's a few in Surrey, but they're studios.
Well, yeah. Okay. So a family of four. Great.
Yeah, exactly. It doesn't work in this province. And again, right, it's there's a national blanket on the rebate. It doesn't scale up based
Mm,
on average home prices, right?
yeah.
Obviously, GST up to 350 or 450K for something in Saskatchewan might get you something a little bit more substantial for a family than it will in British Columbia.
Right. But I guess the GST rebate that the government is going to pay out, I mean, how many of those homes are they going to pay out in Saskatchewan versus where the vast majority of the marketplace is driving, right? They're
Yeah,
going to pay next to no volume on this.
that's it. Yeah. Again, it feels a little bit like just optics, right? We're doing
Yeah.
something. There's a big GST rebate available for everybody who wants it.
Yeah, exactly. But
So
you
I
still got
think,
to pay your tax.
yeah, right. So, like Ryan touched on, this is, kind of further exacerbated this week when Bank of Canada, they held rates, right?
Yeah. Yeah.
But I think what they did change is something to note. They've been talking about how they are going to keep these rates where they are until 2023. Well, that tone has changed.
Mm.
They've pushed up that date. They're kind of mentioning that, hey, there's the potential of interest rates now um, being increased as soon as the second half of 2022. Right. And that's only
Wow.
just over a year away. And of course, that number can change again. Right. So they've promised 2023 for a year. And, well, the
Now
date
they're
has changed. So their promise has changed.
Yeah, and I think when they first came out and with that messaging, the interest rates are going to be low for 3 years. I think that was to induce a lot of spending, right? And then they dropped the rates, and people went on their buying spree, and it's contributed to the recovery of our economy to some degree here. But I think that messaging was probably again by design, so people will go out and do that, right? And now they're ratcheting it in because it was far too aggressive messaging. And I just they have to. I mean, inflation is probably already an issue, right? Um, it's just going to hit the economy at that time.
Yeah, I
So
agree. I think too, I mean, making any type of statement or prediction that's 3 years out
it's
is
hard.
very challenging in any industry.
Yeah.
But no, I think you're right there, Ryan. And they just wanted a message out there to instill the confidence, to
Yep.
induce the buying.
And it
And
worked.
it did 100% it worked,
Yeah.
and now that they've changed their tone, what are you going to do? Okay. That's just what it is, right? You can't, say, hey, you said 2023, it's not going back to that right now.
Well, and then it starts to beg the question, what is it going to move to, and how quickly is it going to move?
Mm-hmm.
And we're not being kind of shown anything. Where's our inflationary target, right? I know it's 2%, but where are we at right now? And what are we doing to, because, any changes to the economy take, anywhere between, I would say, 6 months to 12 months before you actually see the ramifications of those decisions, right?
Mm-hmm.
So that's probably why they're making these calls now, because they already see it coming, right?
Yeah, and I think this reflects in their bond purchase as well.
Mm-hmm.
So, when the sort of height of pandemic was happening, they were at 5 billion per week of government bond purchases. That dropped to 4 billion, and then now they're going to actually bring that down to 3 billion. So they're only printing $3 billion worth of money into the economy basically per week here.
So they're still seeing that a recovery is required, or stimulus is still required
Mm-hmm.
in order to keep the wheels turning. But they are recognizing that it is turning,
Yeah.
right? So they can kind of, I think I want to say like 3 or 4 months ago when we talked about when the recovery would actually take place, you're not going to see like a break onto the economy all of a sudden, but you're going to see them lift their foot off the accelerator. And that's exactly what we're seeing here, right?
That's
It's
right.
starting to lift. And things are starting to come back into the economy, which is great. I mean, we need the economy to recover and rebound, and for us to get back to some sort of normalcy here. Um, but do you understand? I think the point we're making is that the messaging is um, influenced people.
Hmm. Yeah, yeah, I think you framed that nicely. They are just kind of they're tapering off, right? And
Yeah.
they're feeling a little bit more confidence in the economy, and clearly feeling that confidence is coming sooner than expected.
Hmm.
And I think it might accentuate, like you said. I mean, anybody who's out there trying to, let's say, build a home or buy lumber or buy gas or buy almost
Hmm.
anything in today's markets, you're realizing that yes, they're a heck of a lot more than 2% higher than they were a year ago,
And
right?
there's
Lumber
just,
alone is what, 300%.
yeah, and housing markets up 17, 18%,
Right.
right?
So
So
it certainly feels like inflation is a lot higher than 2% for anybody out there, living a day-to-day life here, buying goods and commodities.
yeah,
So
we can see it, right? So I mean, it's coming, and that I guess if you actually have a variable mortgage, um, pay close attention to these announcements, right? Because it could change. And I don't know where it's going to go in the next sort of 5 years here, right? But a lot of people just bought homes, right? And some of them are on variable mortgages. And if that, number starts to move, you may want to look at locking into a 5-year rate if, inflation starts to get to become a bit of an issue, right? So that way you're not paying, 4 or 5% in 3 years or 4 years on your property, on your mortgage, if that happens, right?
yeah. And then people, I mean, it's always access to credit that's going to largely affect real
Yes.
estate prices.
Yeah.
So yeah, of course, right? Once inflation starts to happen, once the interest rates start to increase, that access becomes harder, right? What you
Yeah.
can access becomes smaller, and that will directly affect real estate prices. How high and how quick that goes, nobody truly knows here, but it will happen, right? It obviously cannot continue on this pace and at this rate, and
No.
with
No.
rates this low. We all know that. We've been talking about that for some time. So yes, be prepared for higher rates, and only buy intelligently here, right? The stress
Yeah.
test is there to save ourselves from ourselves. That's why mortgages
W-
and arrears are almost at all-time lows. But again, be conscious that the rates are likely only to rise.
Yeah. And I mean, we've seen, and they can definitely get there. And I think it's important to remember that it was, in the 80s when we saw 20% mortgage rates, right? So to think that 5% or 4% isn't possible, you know, I definitely think it is, especially with the amount of stimulus that we've injected into the economy over the last year and a bit. That's going to have a repercussion, and the repercussion will be inflation, and the ability to control inflation is going to be through your interest rate. So pay close attention to it because it could cost you money if you don't switch.
Mhm. Yeah, and I think it's also important to know. Okay, so many people like to kind of hedge their bets on one singular piece of data,
Mm,
right? Like when mortgage deferrals existed, the cliff was going to happen, or the end was going to happen because of the mortgage deferral cliff, right? That was
yeah.
it. It's the one
Yeah.
singular sort of item that was going to ruin the market, and then of course, that didn't happen, and then now it's like, okay, well, as soon as interest rates rise, that's going to make the crash happen. And there's just so many other aspects that the
Hmm.
policymakers can kind of pull the levers, as we've been saying, to make that increase in interest rates not have as a dramatic effect as some people think. For
Yeah.
example, let's say interest rates rise, housing prices are going down too quick. Well, hey, guess what? 40-year amortizations are back. And
Yeah.
there you go.
Yeah.
There's more buying power right there. Just as an
Yeah.
example, hey, investors, guess what? You can buy homes now for 5% down instead of 20%.
Yeah.
These are just examples. There's no guarantees here, but it's never a singular event that's going to change housing prices, and
Correct.
and there's just so much happening in the background that can then slow the effect of that singular event.
Well, and a lot of people, when interest rates rise up, right, everyone starts to again call for the burst of the market, and the housing bubble will crash, and all of that kind of stuff, right? It just becomes so unaffordable that nobody can pay their mortgage, and then away it goes, right? But again, people often forget some of these statistics, which it speaks to why it's never happened. We've seen corrections in the market, sure. Have we seen more than 15 or 20%? Not really. At least not as far back as I can remember. Maybe in the luxury real estate side of things, but it would be in segregated markets, not in a macro market. And so when you think of on the macro level here, remember that 76% of Canadians own their homes, right? And 45% of that group owe nothing. So it doesn't matter if interest rates rise. It's not like a bunch of people are going to be left homeless.
Mm-hmm.
They're going to have their homes and they can't be evicted. They don't have to add to the supply. They don't have to do anything. They don't owe anything,
Yeah,
right?
that's essentially 1 in 3 homes are owned outright.
Which just speaks to the wealth of Canadians, generally speaking,
Mm-hmm.
right? And we know that in the last year, the total wealth gap created between homeowners and renters, I think the homeowner class went up by 1.1 trillion in total wealth across Canada, whereas the renters went up by just under 100 million, right? And I mean, so the idea of a burst coming or a massive correction, I just don't see it because Canadians are vested in the industry, right? And when 45% of Canadians don't owe anything and 76% of them own homes, the government really has to focus on keeping the prices stabilized. Otherwise, they'll bankrupt their citizens. Right. And so, that also speaks to where we're going with how people buy, which is obviously a huge transfer of wealth here. And then also, we got to look at immigration, and immigration is so aggressive right now. In the next 3 years, we're looking at 1.5 million new permanent residents every 3 years right now. Right. And, you know, as we continue to roll people through and they come into the country, um, there's going to, the demand for real estate will maintain. And the cost of building it is going up. So when you start looking at these factors and people go, I can't keep rising. Well, it can because the system's perpetuating, right?
Mm-hmm.
So as long as we have a growing population, not a shrinking one, people are going to need a place to live. People are going to have to build. So the cost is going to go up, right? Especially in densified areas that already exist.
I think it's worth reminding people too that people pay their mortgages,
Mm.
right? Again, if you're financially strapped and you have to decide between a roof over your head or something else, most Canadians are going to choose for that roof. Um, and I just pulled up some interesting data here too. We were just talking about these 20% interest rates, right, through the 80s. Well, I just pulled up the arrears data. Now it only dates back to 1990, but of course, interest rates, were a lot higher than they were now. They were still in the teens then, if I remember correctly.
Wow.
The arrears rate in 1990 for Canadian mortgages, 0.16%. It was actually lower than it is today at 0.23% with all-time low mortgages or
Wow.
interest rates rather. So even with, interest rates in the teens, people pay their mortgages.
Yeah. I mean,
It was a very different
so
climate then. Yes, you can argue price point was different. You can argue all
no, but
sorts of angles, but at the end of the day, again, levers can be pulled.
well, people were losing their jobs then at that time as well, right? When interest rates were that high. And I'm sure families were helping pay off those mortgages. Owning real estate is, when you look at the 44-year trend, we just had a client who made 600% on the sale of their home over the course of 30 years,
Mm-hmm.
right? So when you look at that kind of return, people are going to do anything they can to hold on to that asset. It and the utility for a home is only going up, right? People are now working from home. People are now working out from home. So the utility of a home, the value of that home is going up. So people are going to do everything they can to hold on to it and protect it.
I want to shift gears a bit here and talk about the supply issue in that very fascinating interview we just heard.
Yeah, absolutely.
So, yeah, we've been talking about what the government's doing here to cool the market, which ultimately looks like very little. We always talk about how, supply is what's also going to radically help the cost of housing, that alongside, of course, with the increased interest rates. But a professor, Mr. Ian Lee from the Sprott School of Business, gave an interview last week that was very interesting. His history is 10 years in banking on the lending side, and now he's a professor. His take, his understanding of what's happening on the supply side from the government issue and what's really happened here with the price explosion, he says it was socially engineered by three levels of government, right? You've got the Bank of Canada with the interest rates, and then you've got the provincial governments imposing rent controls.
Mhm.
So, it sounds like, okay, if you can limit what a landlord can charge for rent, that's going to help housing.
Mhm.
Well, his studies prove very much the opposite. And the main reason is, of course, here is that if you're an investor and you're trying to provide housing to people as a landlord, if you are capped on how much money you can essentially make, and again, we're just talking about market rents here, but if the governments are suppressing that, you lose interest and you're going to put your capital elsewhere. And so that creates a shortage of rental housing because you're stopping, the average investor from providing housing to people.
Mhm.
And that, of course, pushes your average renter into being a homeowner, a buyer. Because if your
Right.
rents are so high because there's such limited supply, then why don't you just say, and we see this all the time, hey, my rent and my house payments, if I owned it, are pretty darn close here. Why don't I just become a homeowner? And that, of
Yeah.
course, is again a lack of supply.
And a push for people to get into home ownership, and keep buying the supply that comes to the marketplace as opposed to renting it, which would allow for a housing stock, and people to have a place to go. But instead, um, those units now come on the market. You drop interest rates so people can buy them, and then the supply gets eaten into, and prices go up.
Yes. And the biggest thing that I think I learned from that interview was his take on the restrictions of growth.
Yeah, it's a big thing.
We
It's
have talked.
stifling.
Yeah, gosh, we've talked kind of ad nauseum about, the issues that developers and builders have here in Vancouver and BC about getting building permits, right? We all know that it takes sometimes years to get a
Mhm.
building permit.
Mhm.
And this can be from a laneway house to, a 500 unit tower. Um, this is apparently being done by design.
Mhm.
Okay, so the governments are presented these projections of growth, and as we know, right, the government says, yeah, we want to put 405,000 people into Canada this year alone, right?
Right.
This is StatsCan data; it's all accepted. This is well-known information. And then on the flip side of that, they say, okay, great, obviously housing is going to be needed, but we are going to suppress the amount of housing, building permits, etc., that they're actually going to allow out there.
Undersupply the demand.
Undersupply at the demand. And we're today's market is an exact example of the result of that, right? There's
Mhm.
not enough homes for the people that live in this country.
Mhm.
And yeah, the fact that this is being done by design was a bit of an eye-opener, a bit terrifying. So you've got the government literally saying, we know how many people need homes, we're going to suppress that amount of homes, and the homes that are available, well, we're going to control the price of those.
Yeah, and I mean, I think when people think about by design or by negligence, your mind leaps to conspiracy, right? And I I'm not much of a conspiracy theorist, but I think when the story's been the same story for, I don't even know, as long as I've been talking about it, it's been the story of permit waits, takes 4 years to build a tower here, so on and so forth. And the prices keep going up, you know, and we start tinkering with things, but never actually really changing the main issues and expecting a different result. You start to think you're insane. And at the end of the day, uh, you know, you got to look at it as, as where do some of these counselors live? What are what are their interests, right? And stifling and prolonging building and making regulations to whatever it is you're building very difficult and extremely expensive results in higher prices to the consumer at the end of the day, and that again lifts prices, right? So there is an interest there, and it's if it hadn't been going on for so long, I'd be a little bit less sort of intrigued by it. But the fact that it's been going on for what feels like decades, um, it's time to start thinking about it maybe in a different way.
I think the biggest takeaway here is to recognize that it is controlled. It's largely corrupt, to be honest. Government's not coming to save you and save your home prices from or to make them affordable, quote unquote. It's a bit of a hard pill to swallow, but again, if you realize this, maybe it will help make a decision on whether home ownership makes sense to you. Because again, we've got this world that we live in that has a federal government that's protecting home prices from both sides, from the supply side and the demand side. They're controlling both. So love it or hate it, I think it's worth acknowledging and making your decisions on if it's worth being a homeowner based on that information.
Well, also, you know, you could look at the system and say, I'm going to shake the system up. I don't think that's going to happen really at the end of the day. I think there's a lot of um, influence at play here. So I think understanding maybe how it works is to your advantage, right? I think if you want to change the system, that's it's going to be a big uphill battle that I think a lot of people have tried and gotten nowhere with. So, making yourself aware as to how it works and then positioning yourself accordingly, you can set yourself up to win, right? So, and I think it's kind of like a board game. You got to understand the rules before you know how to win.
Yeah, well
And I think
put. And
that's,
and this in no way is suggesting that house prices will only go up. Not at all,
of
right?
course, yeah,
The cycles will 100% still happen. House prices will go down in the future, 100%. Um, it's just a matter of how much. And again, we've seen that control happen many times, right? We keep seeing a sort of a maximum lower bound of about 15% drop before policies come back to help prop up those prices. That's
yeah,
what history's done. We don't know what's going to happen, moving forward, but we've seen it happen time and again. And we now have a really good understanding of how much control is in play here. And
mhm.
so, I know I'm going to still feel comfortable paying my mortgage because I think home ownership is what's right for me.
Of course, and then I'm very much of the same mind as well. I mean, home ownership, especially hard assets, are a great buy, great ownership in times of inflation because it's a great hedge against it. Um, but you got to be able to service that loan if
Mm-hmm.
inflation does move, right? And so you got to make sure that you can do that, and if you can, you'll stand to make money in the long run, right? That's the way that the whole system's designed to work.
Yeah, I think as a politician, as a government, when you look out and you see 3 out of every 4 people in Canada are homeowners, I think it's a pretty easy decision for them to make of who they want to and how they want to protect it.
Or they just don't have a decision.
There you go. Great. Okay, I think well, just a little bit on what's happening sort of on the ground here before we jump off, but the market is definitely changing, right? I think we've
Yeah,
touched on this for a couple of weeks now. Homes are getting way less offers than they were just a month ago. A lot of listings that are holding offers to try and go into multiples are actually getting zero.
yeah.
um, the price or the rate of price inflation, I think, is slowing already. It's still we're definitely absolutely going to see an increase, for the month of April here, but that rate is slowing.
Yeah, the ferocity I think of behavior has changed, right? I think you saw kind of the price creep and the price move up over the last 2-3 months, and I think a lot of people wanted to get in, but I think a lot of people have got in and are making their changes, and we're starting to see subjects come back into contracts here. But we're also seeing, sellers on the flip side that are kind of showing some greed too, thinking that the market is still incredibly strong and expecting, their property to sell 50 or $100,000 over the ask price, and it's just not happening
Yeah,
to
that's
that
that's a
degree,
that's a
right?
big one to note there, Ryan, because yeah, even ourselves here this week, I offered on 3 properties full ask.
Right,
And all 3 of these properties were holding offers.
right.
We were the only offer. All 3 said
Mm,
no, thank you, and either relisted at a higher price because that's what the seller wanted,
yeah.
or listed even lower to try and get it into multiples the next time.
Mm.
So it's very interesting to see sort of the seller thought process out there right now. And I think, like you said, people are wanting March's numbers, and those numbers are largely not here anymore.
Well, yeah, because the market moves before the news, right? Which is why you gotta buy the rumor and sell the news.
Mhm.
But it's changing now. I still expect to see growth. I still expect to see um, a rise in prices over before the end of the year, but I do think that it's going to taper off. I think the messaging, even just the messaging alone from the federal government, is enough to kind of get people thinking about, well, changes are coming, right? So that's going to change buyer behavior and what they do with interest rates. So
Well put. I think that wraps it up for us this week. As always, thank you everybody so much for listening and watching, and we will have another one for you next Saturday.